In recent weeks, the cryptocurrency world has been shaken by a dramatic event, the Bitcoin crash. This unexpected downturn has sent shockwaves through the crypto market, leaving investors and enthusiasts scrambling for answers. The impact has been profound, affecting not only Bitcoin but also the broader spectrum of digital currencies. In this video, we'll delve into the reasons behind this seismic shift, analyzing its implications and what it means for investors going forward. Our aim is to provide clarity amidst the chaos, setting the stage for a deeper understanding of this financial phenomenon. Whether you're a seasoned trader or new to the crypto space, we want to equip you with the knowledge needed to navigate these tumultuous times. Stay with us as we explore the magnitude of this crash and why it matters in today's investment landscape. Let's dive into the details and uncover the truth behind Bitcoin's shocking decline. Join us as we venture into this analysis, preparing you for what's to come in the world of cryptocurrency investing. Next, we'll take a closer look at the core issue, market volatility. Market volatility is a double-edged sword in the crypto world, crucial to understanding Bitcoin's crash. Volatility refers to rapid and unpredictable price movements that can either propel investments to new heights or plunge them into deep losses. For Bitcoin, this volatility has been a significant factor in its recent instability. Historically, Bitcoin's price has seen dramatic fluctuations, marked by rapid ascents followed by steep declines. These patterns are not new, but their intensity can often catch investors off guard, leading to panic and abrupt sell-offs. Understanding these historical patterns helps investors make more informed decisions and potentially mitigate risks. By recognizing these patterns, traders can better anticipate potential market swings and prepare accordingly. As we move forward, we'll explore the external factors that further influence Bitcoin's market behavior, providing a broader perspective on what drives these turbulent times. Stay with us as we unpack these critical elements and guide you through the complexities of crypto trading. As we delve deeper into Bitcoin's complexities, it's crucial to understand the external forces shaping its market behavior. Global economic conditions have a profound impact, often dictating the ebb and flow of Bitcoin's value. When major economies face turbulence, Bitcoin doesn't remain untouched. Regulatory news also plays a pivotal role, with policy changes sending ripples through the crypto market, causing fluctuations in prices. Technological challenges further complicate the landscape. Cyber threats and security breaches can undermine investor confidence, leading to significant price drops. Beyond the inherent volatility of cryptocurrencies, these external factors are influential forces that can sway Bitcoin's trajectory dramatically. Recognizing these elements is essential for any investor looking to navigate the tumultuous waters of crypto trading. As we move forward, understanding the nuances of these influences will be key in making informed decisions. Next, we'll explore how investor behavior can drive market trends, offering further insight into the dynamics at play in this ever-evolving arena. In the unpredictable world of cryptocurrency, investor behavior plays a pivotal role in shaping market trends. We explore how the pendulum of investor sentiment, swinging from fear to greed, drives Bitcoin's price fluctuations. When fear grips the market, prices often tumble as investors rush to sell off their assets. Conversely, during periods of greed, there's a buying frenzy that can inflate prices beyond sustainable levels. This emotional volatility can lead to significant market disruptions, making it crucial for investors to understand and navigate these psychological. For those involved in crypto trading, recognizing these patterns is essential for informed decision-making. It's not just about the data or charts, it's about understanding the human element behind every trade. As we delve deeper into this analysis, remember that being aware of your own emotional triggers can be just as vital as knowing the market stats. Up next, we'll dive into a detailed analysis of the Bitcoin crash timeline and the factors that contributed to this market shakeup, providing expert insights to guide your investment strategy. Let's take a closer look at the timeline of events leading up to the recent Bitcoin crash. It all began with subtle market signals that many overlooked, but soon, these signals cascaded into a dramatic decline. Understanding this sequence is crucial for any investor. Various factors contributed to this downturn. Firstly, the increased scrutiny from regulatory bodies created waves of uncertainty across the market. With every new regulation, investor confidence took a hit, accelerating the crash. Next, global economic conditions played their part. As inflation rates rose and international tensions flared, Bitcoin stability was further compromised. But it wasn't just external pressures, internal market dynamics also had their say. A sudden surge in Bitcoin sales overwhelmed the market, driving prices down rapidly. This sell-off was partially fueled by panic among investors fearing further losses. To make sense of these complex interactions, we turn to industry experts. They suggest that the convergence of these elements set the stage for what we're witnessing now. One expert highlights how investor sentiment, often swayed by fear and speculative news, amplified the crash's impact. Such insights are invaluable as they not only dissect past events but also offer lessons for the future. Understanding the anatomy of this crash helps us prepare better strategies to navigate similar situations moving forward. As we move on to discuss investment strategies amidst this uncertainty, remember that knowledge is power in the world of crypto. Armed with these insights, you can make more informed decisions on whether to hold, buy, or sell your assets. Let's explore these strategies in our next segment. In times of uncertainty, strategic investing becomes crucial. Navigating volatile markets requires a keen understanding of risk management. Let's explore how diversification can serve as a buffer against the unpredictable tides of the crypto world. By spreading investments across various assets, you can mitigate risks associated with sudden market swings. Consider adopting a balanced approach that incorporates both high-risk and stable investments to cushion potential losses. Additionally, keeping abreast of market trends and economic indicators can provide valuable foresight. It's vital to remain adaptable, adjusting your strategies as new information emerges. Remember, in a rapidly changing market, flexibility is your ally. Moreover, employing stop-loss orders can protect your investments from drastic downturns, offering a safety net when the market becomes tumultuous. These strategies, combined with informed decision-making, empower investors to withstand the storm and seize opportunities amidst chaos. As we delve deeper into investment decisions, consider how these strategies align with your financial goals and risk tolerance. Up next, we'll weigh the pros and cons of investing in Bitcoin now, helping you make an informed choice in this uncertain landscape. Should you invest in Bitcoin now? This is the big question many potential investors face amidst current market conditions. Let's weigh the pros and cons to help you make an informed decision. On the one hand, Bitcoin's recent price drop could present a buying opportunity for those looking to enter the market at a lower cost. Historically, Bitcoin has shown resilience and potential for significant returns. However, it's essential to consider the volatility that characterizes cryptocurrencies, which can lead to sudden and drastic price changes. Before deciding, evaluate factors such as your financial goals, risk tolerance, and the broader economic environment. Are you prepared to handle potential losses? Do you have a diversified portfolio to mitigate risks? These questions are crucial in guiding your decision-making process. Ultimately, investing in Bitcoin requires careful consideration of both the risks and rewards involved. As you ponder your next move, remember that informed decisions are the key to navigating the uncertain waters of cryptocurrency investments. Up next, we'll recap the key insights and strategies discussed today, helping you stay ahead in this dynamic market. As we wrap up, let's revisit the essential insights from today's exploration. We've delved into the intricate dynamics behind the recent Bitcoin crash, examining how market volatility and external factors have shaken the crypto world. Throughout our analysis, we've uncovered the profound impact of investor behavior and its role in driving market trends. Moreover, our expert insights provided a detailed timeline of events and contributing factors, offering clarity amidst the chaos. Moving forward, we discuss strategic approaches to investing during uncertain times. With tips on diversification and risk management, we aim to equip you with practical tools for navigating volatile markets. Whether you're contemplating investing in Bitcoin or opting to hold back, weighing the pros and cons remains crucial. Informed decision-making lies at the heart of successful investment strategies. By understanding market fluctuations and employing prudent tactics, you can better position yourself in this ever-evolving landscape. Stay with us as we conclude with essential reminders on staying informed and cautious in your investment journey. Your financial well-being is our priority, and we're here to guide you every step of the way. As we reach the end of our exploration into the recent Bitcoin crash, it's clear that navigating the world of cryptocurrency requires a well-informed approach. The market's volatility, influenced by external factors and investor behavior, demands a cautious eye and a strategic mindset. Now, more than ever, it's crucial to stay informed about market trends and global economic shifts. By doing so, you can make smarter decisions, whether you choose to invest or hold back. Remember, the key to successful investing lies in understanding the landscape and preparing for the unexpected. As we've discussed, diversification and risk management are your allies in these uncertain times. Don't let fear or greed drive your decisions. Let knowledge be your guide. We encourage you to subscribe to our channel for more insights and updates on the ever-evolving world of cryptocurrency. Stay connected with us to continue receiving expert analysis and advice. Thank you for joining us in this deep dive into Bitcoin's recent downturn. We hope this analysis has provided clarity and confidence in your investment strategies. Remember, informed decisions lead to better outcomes. Stay informed, stay cautious, and most importantly, stay ahead. Until next time, happy investing!